Stock market investors have started becoming very nervous. Stock market has been very volatile during last couple of weeks. On last Friday, Dow Jones Industrial Average fell another 700 points on top of a massive amount of loss during last few weeks. The market has been so volatile because of various reasons. Number one has been the new tariff policy imposed by President Trump, where there has been no certainty about many of the policies. Number two is that inflation numbers are still picking up. And thirdly, the consumer confidence that has been plummeting in the latest report. President Trump declared that April 2nd is going to be the Liberation Day, where all his tariff policies are going to be. President Trump also announced that he will impose 25% tariff against all imported vehicles which are foreign made, which are not made in the United States.
Announced Wednesday, the U.S. will impose a 25% tariff on imported cars and car parts.
If they're made in the United States, there's absolutely no tariff.
Trump aiming to boost manufacturing in the U.S.
A lot of companies are going to be in great shape because they've already built their plant. Others will come into our country and build.
Nearly half of all vehicles sold in the U.S. are imported, including popular cars like the Chrysler Pacifica minivan, the VW Jetta, some Chevy Silverados, and the Ford Maverick, according to Auto Week. And many companies, even if they have American factories, use foreign parts.
It's pretty easy to do if parts are made in America, and we'll have very strong policing.
Now, experts say the tariffs could raise the price on new cars by thousands of dollars, and it could come quickly. Dealers only have about 60 days of inventory on their lots. Like many of the Trump administration's tariffs, Mexico, one of the biggest exporters of cars and car parts, will be hit especially hard. Trump is also targeting Canada, another major exporter. The Canadian Prime Minister responding overnight.
This is a direct attack, to be clear, a direct attack.
So these tariffs will go into effect next Wednesday night on President Trump's, quote, Liberation Day, where he is expected to roll out more sweeping so-called reciprocal tariffs against just about every major trading partner.
According to the analyst in Goldman Sachs, that Trump's 25% auto tariff may increase the prices of certain cars up to $15,000. I think it's going to be in the range of $5,000 to $15,000. Along with that, as you know, if the car prices go up, the insurance rates or the insurance for car insurance are also going to be going higher. This car price is not going to be going up immediately. I think, many of the dealers, car dealers, if they have mentioned that they still have stocks for maybe like a month or two before they start, getting the tariff new cars coming in. At that time, I think the car prices are going to be going up. According to the inflations, the PCE number, Personal Consumption Expenditure, published last week, it is showing that PCE has increased 0.4%. Although personal income has gone up about 0.8% and disposable income has gone up 0.9%, the personal saving rates has been going up 4.6%. That means that the investors have started saving money and they have been not spending too much. The consumers are not spending too much and started saving their income, which is a good thing. But at the same time, if they save more money and not spending, that is going to be actually impacting the companies or the people who are selling the products to the consumers. So that means that the consumers have become more conscious and not spending money. So disposable income, although it's going up, personal income also although it is going up, they have been saving more and not spending as much. As this inflation is picking up, Federal Reserve most likely is not going to be cutting the interest rate anytime soon. The Fed has the target of bringing interest rates up to 2%. So with this 0.4%, meaning inflation is still about 4-5% range, that means that the Federal Reserve is under no urgent, there is no urgency for the Federal Reserve to cut any interest rates unless the labor market suddenly deteriorates and a lot of people lose jobs. So at this time, people are anxious what the Federal Reserve is going to do in terms of interest rate policy. According to the Statement of Economic Policy, SOP, in this particular SOP, latest SOP from the Federal Reserve, that GDP number in 2025 is targeted at 1.7%. This projection was 2.1% GDP. Was in December, the GDP projection was at 2.1%, meaning this revised GDP number is going down to 1.7%, meaning the economy is slowing down according to the Federal Reserve. Also, unemployment number is going to be going up from 4.3 to 4.4%, and the inflation number, PCE inflation, is the projected to be from 2.5% to 2.7%. In this stock market sell-off, the commodity, mostly gold price has been spiking up. Currently, the Friday, the gold price of gold, COMEX gold, reached another all-time high at $3,118 an ounce. I also made another video regarding why this gold price has been surging. So at this uncertain period where people are very nervous, people are buying gold as their hedge, or if there is any problem with currency devaluation or the market crash or the inflation, especially gold is used as a hedge. That's why the gold prices are going up, and a lot of these central banks, they are also buying gold. So gold price potentially could be going even higher because of uncertainty and also geopolitical instability. In terms of consumer confidence, the survey of consumers from the University of Michigan, the latest numbers for March gone up down by 12%. Economic condition has gone down by month to month, down 3%, and index of consumer expectation is down by a whopping 18% month to month, and year to year 32%. So the consumers are really plummeting, started having negative sentiment about the economy. Expectation of index falls across all groups. It doesn't matter in terms of by age or any kind of political affiliation, pointing down towards the end of this graph in 2025. So, and the US economy depends a lot on the consumers. If the consumer confidence is going down, the profitability of these companies, they are going to be impacted. If the consumer suddenly stops spending, their revenues are going to be impacted and the profits are going to be impacted, and the market has been very volatile, reacting against this. So with this economic environment, market has sold off a lot. I think in some of the indexes has been down over 10%, or technology stocks are down 15-20%. At this time, what you should be doing, I think this is not the time to panic. On course and try to study and see if it will be a good time, or keep investing in the market, because usually most of the money is made when the market is down, and not panic instead. But at the same time, please consult your financial advisor, because I'm just a YouTuber. I do not give any financial advice, but I would say that stock market in a long term, say 2 years, 3 years, 5 years, or 10 years, market always goes up. So in this kind of market turbulence creates better opportunities, and you should be you should stay invested in the market. Share your comment, what you think about the U.S. Consumer confidence, and how you may be thinking in terms of the economic outlook, the inflation, consumer confidence, and about the tariff policy. Are you concerned, or what do you feel about the U.S. economy? Would appreciate your comment. So that's all for this video. If you like this, please click the like button and subscribe. I would really appreciate it.